Vietnam entered the final quarter of 2025 on a strong diplomatic and economic footing. At the ASEAN summit in Malaysia, Vietnam and the United States announced a framework for reciprocal, fair, and balanced trade. Shortly after, Vietnam elevated its ties with the United Kingdom to a comprehensive strategic partnership, paving the way for deeper cooperation in finance, renewable energy, and infrastructure. On the economic front, Vietnam's manufacturing PMI rose to 54.5 in October, signaling solid expansion with strong growth in output and new orders. Exports and imports in the first 10 months climbed 16.2% and 18.6% respectively, lifting the trade surplus to $19.6 billion. Retail sales rose 9.3% year over year. Although tourist arrivals continued to grow strongly, up 21.5% year over year, spending activities were partly affected by several storms in October. On the domestic side, the government introduced further stimulus measures by raising personal income tax deductions, allowing around 2 million individuals to be exempted from income tax. Meanwhile, inflation eased to 3.2% thanks to lower transportation costs. FDI disbursements reached $21.3 billion, with rising site visits from Chinese manufacturers, while new projects proposed by Amada and V-Ship signal enduring investor confidence in Vietnam's manufacturing future. Interest rates in Vietnam are returning to normal after a long period of unusually low levels. Commercial banks have lifted deposit rates by 50 to 100 basis points, bringing the 12-month tenor to around 5.5%. The move helps balance credit growth with slower deposit inflows as households shift savings toward gold, USD, and real estate. To ease funding pressure, authorities are developing the corporate bond market, now requiring credit ratings for public issues. Higher rates are also supporting the Vietnamese dong and widening VN/DU/SD interest rate gap. Toward year-end, the Vietnamese dong may still face mild pressure from higher import demand, but this should be much more contained than before. The VN index slipped 0.6% in October as investors took profits following FTSE Russell's announcement upgrading Vietnam to emerging market status, a classic case of buy the rumor, sell the news. The pullback was most visible in sectors that had rallied earlier, especially financials. Market sentiment also cooled as banks raised deposit rates, leading to more cautious trading. Average daily trading value reached USD 1.28 billion, slightly below previous months, but still nearly double last year's level. Meanwhile, foreign investors recorded net sales of USD 919 million, mainly from the financial sector as they freed up capital ahead of upcoming IPOs. Real estate and information technology led the gains. Real estate rose 3%, driven by Vingroup-linked stocks after the launch of their Cangio project in Ho Chi Minh City. Still, we remain cautious given the group's high leverage, an assets-to-equity ratio of 6.7x, with most profits coming from non-cash financial income. Information technology advanced 10.7%, led by FPT, plus an 11.7%, underpinned by a strong rebound in backlog as global IT demand recovered alongside easing macro uncertainty. By contrast, financials declined 4.9% amid profit-taking. Listed companies delivered solid earnings growth in Q3 of 2025, with aggregate net profit rising 33.1% year over year, while financials and Vingroup-related firms accounted for most of the VN index performance. Other listed companies are posting faster earnings expansion, presenting opportunities to accumulate quality names that remain overlooked. Our portfolio declined 0.2% in October, slightly outperforming the FTSE Vietnam Index, which fell 0.7%. Despite short-term fluctuations, valuations remain attractive. The VN Index is trading at a 2026 forward PE of 11.5 times, well below regional peers such as Thailand, 13.4 times, and Malaysia, 14.1 times. We continue to focus on overlooked companies that have yet to move despite demonstrating solid earnings growth. These underappreciated areas, in our view, offer more compelling opportunities as the market broadens beyond a few large-cap names. With earnings for Vietnam's top 100 companies expected to grow by 20.5% and 10.5% in 2025 and 2026 respectively, we see a favorable setup for selective accumulation in fundamentally strong stocks.